All right, guys, before I do get started, I do want to make sure that you are seeing my disclosure statement. I'm seeing it. You should be seeing it. And what I want to make sure is that you understand that I am not an investment advisor. Anything that I say and show you today is for educational purposes only. So if you decide to take it upon yourself to do anything that I am showing you today, please do consult with your own personal financial advisor so that they can help you to understand and evaluate the risk relevant to trading futures, Forex, stocks, or any other market for that matter. All right, so please do understand that educational purposes only. Don't blow your account and then blame it on me. But with the strategy I'm about to show you, you shouldn't blow your account. All right, but it's also going to be part of money management. You got to learn how to manage your trades and manage your money and things of that nature. You can make 90 great trades and 10 bad trades, and those 10 bad trades take up all your money. All right, so that's just the facts of it. All right, so let's get into this. But before I do get into this, guys, you know I do want to bring something special to you. So I want to give you a word of encouragement. And today's word of encouragement comes from 2 Timothy chapter 3, verses 1 through 5, which says, "But mark this, there will be terrible times in the last days. People will be lovers of themselves, lovers of money, boastful, proud, abusive, disobedient to their parents, ungrateful, unholy, without love, unforgiving, slanderous, without self-control, brutal, not lovers of the good, treacherous, rash, conceited, lovers of pleasure rather than lovers of God, having a form of godliness but denying its power. Have nothing to do with such people." Why is it so tempting to love pleasure rather than God? Pleasure is something we can control, but God cannot be controlled. Most pleasures can be obtained easily. Love for God requires effort and sometimes sacrifice. Pleasure benefits us now, and the benefits of loving God are often in the future. Pleasure has a narcotic effect, taking our minds off of ourselves and our problems. Love for God reminds us of our needs and of our responsibilities. Pleasure conspires with pride, making us feel good when we look good in the eyes of others. Loving God means we must lay aside our pride and accomplishments. Have you chosen to love pleasure or to love God? Pleasure is not wrong when it is sought in connection with God and the proper use of His marvelous gifts. It's only dangerous when we seek it apart from Him. And also, just want to say, guys, all these things that we just said, all those words that we just used, rash, conceited, treacherous, unforgiving, unholy, ungrateful, all those words that we used, it's just so hard, like now, abusive. We see so much of this stuff happening in this world today right now. We see people that will kill you because you cut them off driving. We see people committing crimes where they're committing mass murders. You're seeing all this stuff take place. Guys, this is signs of the times of the earth. But just knowing this kind of stuff and seeing this kind of stuff, it feels like when I was coming up, I didn't see as much as what we're seeing now. And it just seems like we're just getting farther and farther away from God. All right. These people that it says don't have nothing to do with these people. These are the people that you really need to be getting out there and trying to talk to. People that you see like this, and try to help them to seek out and to understand the word of God and to love God. But our world is falling far apart from God. We have so many things that at times myself, guys, I feel myself listening to things on YouTube, watching news, and just seeing how much people don't love each other, how much we see these things that we're talking about in this verses that we just talked here. And it just hurts your heart. It makes you cry. And that's the way I feel every time I see these things. I just cannot believe people would kill another person so easily, would hurt another person so easily, would rape another person so easily, would steal from another person so easily, would do the things that we do to other people so easily and without caring. It just breaks my heart. and it's just hard to see and watch. So I just wanted to put that out there today, guys, because we all need to love each other. We need to see these things that this verse is talking about, and we need to try to make sure we're not involved in that kinds of pleasures. And then we also want to make sure that we can try to talk to others and help them to get out of this kind of lifestyle. All right, guys, just a word from the Bible, and I hope it touches your heart. In the name of Jesus Christ, I say this to you and pray. Amen. All right, guys, so we talked about the strategy, and I'm not going to go deep into the strategy because we already talked about the strategy in part 1. So if you missed it, go back and watch part 1, and it'll explain the strategy in a little bit more detail than I may do here today. But the first things that you really want to understand when you look at this strategy is you want to first understand, number 1, the bias of the cloud. What is this cloud telling you? Is the cloud telling you it's bullish or bearish? That's going to be the main thing that you're going to really be concerned about, and that's going to be the thing that you want to really take notice of. All right, and then the next thing you want to take notice of actually is going to be the second thing is going to be the crossover. So when you see that crossover, that's going to be one of the main things that you want to really see and understand and know that, yeah, the crossover is bullish, I'm bullish. The crossover is bearish, I'm bearish. So those two things together will give you your directional bias. And then the third thing, so let's back this up real quick. The first thing you want to understand is the directional bias of the cloud. The next thing you want to understand is the directional bias of the TK crossover. And then the last thing you want to really know is the breakout of that Tinkinson. So once the market breaks above this green Tinkinson line here, which is basically a 9 period, it's more than a moving average because it's not based off of the close, it's based off of the high and the low. All right, so when we see that, it's basically the midpoint of those 9 periods. So it's the equilibrium point. So when the market's out of equilibrium, that's when it's moving. When it's in equilibrium, it's near this. When it breaks above this level, we're breaking out of equilibrium. All right, so we're getting a market that's moving out of equilibrium. That's when you want to get into it. You want to be in a market that's in equilibrium, and then when it breaks out of equilibrium, that's when you want to still be in that market because that's when it's going to be moving. When it's in equilibrium, it's pretty flat. We have equal buyers and sellers, and you always pretty much have equal buyers and sellers. But when we say like there's more buyers than sellers, it's not more buyers than sellers. It's the transaction size and difference. So there could be 3 buys but 8 sells, but of those 3 buys, there was one transaction with 2, another with 3, and so forth. So that's how it covers up those buyer and seller for each side of the market when we hear that. So we're looking for, back this up again, make sure you're clear. We're looking for 1, directional bias of the cloud. 2, directional bias of the TK crossover. All right. And then 3, the breakout of Tinkinson. And that's when you get into the market at that point. All right. So here we go. We see this breakout. Watching it break out. Let's see what this market would have done. It breaks out and the market moves higher. Moves a little higher. Moves higher. And so at this point, if you weren't in a trade, you don't get into the trade here. If you don't, this is the last spot you want to get into the trade when it breaks Tinkinson. When it breaks this Tinkinson, it's the last spot you want to get into the trade. Inside of this area is your TK zone. That's where the best spot to get into the trade. The worst spot to get into the trade, but the ideal spot. How could it be the worst but the ideal spot? Is this level right here, because that's what you're going to see most of the time is the break above Tinkinson to get into the trade. The spot where you don't want to get into the trade is after you've already broken Tinkinson and now you're getting into the trade somewhere up here, because now you're getting closer to the 2 level when you entered at the 3 and you're getting closer to the 4 level. You don't want to be closer to those levels when you get into the trade. You want to be as far away from those levels as possible when you get into the trade. That's why this area is the best area to get into the trade. But we want to maintain getting into the trade at the break of Tinkinson for the purpose right now. And you can see how the market moves, and we continue to move, and we get a nice big move to the upside. And then finally, you can shoot for your 1-to-1 target. All right. So your 1-to-1 target is going to basically be just like this. Looking to see where the market moves, because you started from this level, made an N wave, and then move. And sorry, I'm wrong here. I saw the big one. Let me mark the immediate one. You have the 1-to-1 right here. This is an N wave, and it shoots right for that 1-to-1 and hit that target. Now you also have a 1-to-1 here that's a bigger 1-to-1 level. Comes up like this, and it probably hit that 1-to-1 also, but that's a bigger N wave. All right, but I was looking at the immediate N wave that we were in right here, because you already had another little N wave here, and it took your profit right there. You would have made profit on that trade. All right, so that's what we see there. When I look at this entry here, can we do better? All right, can we do better? Can we make this better? So do you have confidence in taking a trade right here at this spot? All right, do you have confidence taking the entry just because it crossed over the Tinkinson level? All right, so what if we can make this entry better? What if I could give you higher probability for success, give you confidence that you need to take that trade? Because this could be a scary trade just taking it like this. What if I can give you more confidence? Well, I will try to. Because basically what we're looking at here now is adding something to help you to gain confidence. We're talking about cumulative volume delta. So there's 2 volume deltas that we're going to be able to use here. So here's one of them. And this is the second one. All right, so let's talk about cumulative volume delta so we can understand what it is and how we're going to use it in this trading. So delta, first of all, we want to understand what the delta is. Delta is the measure of the total difference between your buy market orders on the ask or lifting the offer and the market orders on the bid, hitting the bid. Traders who trade market orders are known as aggressors. Instead of bidding for the price, aggressors buy at market at the current price of the offer or sell rather than give a sell price at the current at market offer price. By purchasing available shares or contracts at the current at market level, aggressors place instantly executable orders. The action of a trader hitting the bid or offer is considered one of more urgency. So if you have traders that are urgent to take a trade, we're not talking about retail traders, because retail traders are not going to move the market. We're talking about institutional traders who are aggressively buying this market without worrying about the spread. They're jumping in the market, boom, right here. Let's get into this market now. We want it right now. Why do you want it so bad? There's a reason why an institutional trader wants it so bad at this point. And if there's many of them doing that, then maybe there's a reason why they're trying to get the market at that point, and it's a good thing for us to be following them. So following them is going to help us when we look at this CVD or the CVO, whatever we're going to be looking at and using. All right. So in order to move the market, you got to have the capital. So like I said, aggressors are not retail traders moving that market. Retail traders cannot move the market. All right. Like I said, it's the institutional traders. And like we're talking about, there's a reason to sacrifice that bid-ask spread. It's because they want that entry now. They believe the market is going to go in their direction, and they want it now. And you should be watching them and following them. All right. And not all institutional traders are going to be lifting the offer or hitting the bid or buying market orders. So the ones that we see buying the market orders are the ones that we can see, basically. But the limit orders are the ones we aren't going to see. Those are sitting at levels where they're looking to get in at this specific level because they believe this is the level where they're going to be able to get into the trade. So knowing that, let's talk about cumulative delta. So the cumulative delta is the net difference between buy and sell volume at each price level. Overall, it's the more so the overall cumulative, all of it. If the cumulative delta is positive, then we have more aggressive buyers. If it's negative, we have more aggressive sellers. Lack of participants is when price trends upwards or downwards, but the CVD does not follow the move. This shows a lack of aggressive participants, and it's a sign of exhaustion or weakness. Absorption is when the CVD is moving higher or lower, but the price is not following. This shows aggressive traders trying to move the market, but price is being absorbed by limit orders. The limit orders are passive traders waiting for a fill at certain price. And I'm not talking retail traders ever. I'm talking institutional traders. So let me explain one thing. When we're going to start, we're going to be using cumulative volume delta, and that's how we're going to make this system stronger. All right, because we're going to be watching aggressors get into trades. We're going to be able to see where aggressors are jumping into trades and making the market move a direction. And if the aggressors are going that way, then maybe it's good for us to be going that way if it lines up with everything else that we have. So that's why it's going to give you more confidence. It's going to give you more affirmative. It's going to affirm your trade more. All right. So also I want to let you know that cumulative volume delta can be traded in so many different ways, and not just the way I'm showing you today. One of the most strongest ways of using cumulative volume delta is for divergences. And I'm going to put out a video about using it and trading it with divergence. And guys, I believe you're going to love it. I think cumulative volume delta is something that you really want to incorporate into your trading. So let's see how we can use this more. All right, so looking at this, we're going to be using trading views. So we're going to be looking at two indicators. One of them is the cumulative volume delta by Ankit_1618. So look that up, search for that, cumulative volume delta, and when you find it, use the one by Ankit _1618 on TradingView. All right, and when you do that, the settings are as follows. Your input, set the length to 10, and style, uncheck the top 3. All right, and then also there's another one that we're going to be able to use. Is going to be the cumulative delta volume by Lonesome the Blue. All right, and on that you won't change anything. Leave it as is. No adjustments to the settings. All right, and then this is another one. Now this one is on NinjaTrader. All right, but what we have here is the same one basically from what we have online on the TradingView, but we had another one of our members make this for our NinjaTrader platform. So this is another one that we will be using, and you probably won't have this one, but if you need this one and you're trading NinjaTrader, just let me know and I may be able to get it to you. All right. So this is one, actually what we're looking at here is also this past Friday, the trades that happened after I got out of the market. I left, because see, this is like 115. I had already made like $1,800 prior to the afternoon, prior to lunchtime, just trading this system, the exact system that I'm showing you. But now when we're looking at this system, when we look at this, we could see the future cloud is bearish. So this whole cloud was bearish. So we had a bearish crossover. Well, this one was bullish. We got a bullish crossover here. So this wouldn't have been an entry. So I was wrong here. But actually, if we just pay attention to the cloud, we would have taken this trade. Now I'm going to move farther into the system and show you that when I eliminate the cloud and I just follow this, I wouldn't have got into this trade at all. But following the cloud based off of just the cloud and the bias of the cloud, you would have had entry there, and your delta confirmed it. You would have had an entry here and your delta confirmed it. So let's eliminate these two, because really in reality, when I show you how to trade opposite, just using the crossovers, you probably wouldn't have taken these trades. But then we got these trades. So basically we're looking at 8 trades here. 2, 4, 5, 6, 7, 8. And every single trade was good. Now look at this trade here. And we can confirm because delta was bearish. And it was a growing delta, negative to the downside. So it went from like -1 something to -248 or 2 something here. Whatever this is, I don't know what this one was. Sorry, I don't know what that is. But you could see it's bigger than the previous bar. Then we had the same situation happen. We moved up by inside this level, and then we closed back below, take the trade, and then we had delta confirming, take that trade. Now here's another good thing. With this delta, you can see the correction, and we turned green, and then we broke below the Tinkinson, and we take the trade, and we were confirming with delta. Take the trade. That's confirming it's a great trade. Price moved higher. Delta became positive. More buyers, more aggressive buyers were in the market right here. But then we saw more aggressive sellers take over here, and it closed below Tinkinson. Take the trade. And then we could see we get a correction. Aggressive buyers are coming into the market. All right. So we see this supply and demand moving back and forth. And now we get this demand moving up here. And then finally we see supply taking over with aggressors selling the market here. And also we're closing below Tinkinson. This confirms it. We take the trade. That's why we were talking about the aggressors. They are these bars here. These are the aggressors. These red bars are sell aggressors. These are buy aggressors, basically. That's basically what it is. And then the last trade on Friday was here. You could see the market correcting. Then you could see boom. And then you could see boom. And then you could see the drop. All right. So confirming with delta, and the market drops. If this was green and this was red, you don't take the trade. You want to see confirming. You don't really want to be against the delta, because if this doesn't ever, if the sellers never come into the market, why would you short this? So this is why this is going to help you as far as understanding and feeling confident and taking an opportunity to trade. So let's look at another setup here. So what we're looking at here now is Quantower. This is the platform that I love and that I use most of the time. All right. Now on this platform, I am doing something totally different. Not totally different, but I'm doing it in a slightly different way. I am using, this looks like Tinkinson, right? This is your Tinkinson, the green line. This looks like Kijinson, right? This is not Kijinson. This actually, guys, is the super trend. All right. So this is the super trend. Looks just like Kijinson. You probably don't know the difference here because it looks just like it. But that super trend is going to give us the bias and the support and resistance levels. So therefore, when we talk later about removing the cloud, we definitely just go with this bias. And you could see the strong bias. And you can see how many opportunities there were on this chart just with the market breaking below the key Tinkinson. We're inside the zone, break below Tinkinson. You had an entry. Let's look at these entries here. This is just crazy. You had an entry here. That may have been a loser. You didn't make much profit there, but you had an entry here. You would have made profit. Never really been able to get into these opportunities, but this is how you can use this to get into some of these opportunities here. And we'll talk about that later or another time. Then we had an entry here because we broke below. The market gave us some profit. Then we kind of broke below here. The market ran, gave us good profit. We kind of went inside and broke below here, made profit. Went inside, broke below here. Then we would have made profit all the way down here. And a lot of times, if you're strong, if you're good, if you know how to trade and you feel confident, once you really understand this, and when you're using the other delta that's on the histogram, if you see that thing staying red or green, depending on the direction you're trading, and price stays below this Tinkinson, you shouldn't get out of your trade until it goes back above Tinkinson, right? So when you're looking at this, when you enter here, you should be able to hold on to this trade till it goes right here. And sure, you lose some of your profit, but you're giving us a chance to run. All right. And then the market breaks below here. This would have been a loser here because you would have got in here. And actually, if you had your stop loss here, you would have been good. But also, you closed back inside of Tinkinson, so you want to get out of that trade. But then it gives you another opportunity here, and you never get out of this trade until in this area. So that drops all the way here. What's going to be so hard to do is when you see things like this. All right. And then another thing, guys, is that what I like to do when I'm following a trade, suppose I get into this short trade here. I like to walk the market on each low and I let the low take me out. And once the low break takes me out, I'm out of the trade. That's one way I like to do. Or I like to do the 1-to-1 level like I told you. So it would be shooting for that 1-to-1 level. Let's say that was the level like we talked about. And then the third thing I would do is just shooting for the market to move lower and then close above Tinkinson right here. That would be a way that I get out of the trade. All right. So if you short here, you're not going to get out until here. All right. because you close above Tinkinson at that point. It's very hard to do this in real time. All right, very hard, because you see profit, then you see profit going away. And then next thing you're saying, should I get out? And then you do, and then you see it run. And it's so hard to do that. That's why a lot of times I have a set profit target that I'm going to take. All right, but that's what we're using. This is Quantower. This is my favorite platform to use for trading anything. I can trade everything on this platform, and it's my favorite. So we're talking about using the super trend, right? So if we're using that super trend, we're going to be using it. Here's the settings that we're looking at with the super trend. 29 and 3.0. Now, when I use this super trend on TradingView, it's not the same. It doesn't line up the same. When I look at everything, it's not the exact same. So I don't know what the difference is, but I'm getting different setup. All right. So let's go to look at this strategy. So basically, we're going to be looking at, on this strategy, we're going to use the one by Lonesome the Blue. Show you an example here. This is that one, and what it's showing me is that we're breaking that level, and then I'm able to take the trade because I got a green candle. And then we break the level. This is confirming for me, along with the direction of the cloud and my crossover, and I'm taking that with confidence, right? So that confirming entry is that green candle, confirming to take that trade that you already see develop with the close above Tinkinson. All right. So now to make this strategy even stronger when scalping, I basically remove the Kumo and follow the directional bias of the TK crossover. All right. So I'm just going to be following the directional bias of the TK crossover. So if I have a bullish TK crossover, then I am long. And if I have a bearish TK crossover, I'm short. Why remove the Kumo? Because the speed of the trend and the momentum. So the speed of the trend, I feel that the Kumo is a little slow to react, and it causes me to miss some parts of the trend, and sometimes the trend's back and forth and I don't get an opportunity. So sometimes I feel like that's slowing me up. And then also the momentum. These crossovers are the same as the 14 period momentum. Let me prove it to you. Let me show you that this is the same as the 14 period momentum. So what I have here is a 14 period momentum right here. All right. Actually, this is a 21 period momentum. And then it's a momentum oscillator. And I'm using this for the purpose of making a point to you. I'm not using this to show you that you're going to use this in your trading also. You don't need to use this in your trading because I'm showing you that. See where this zero level is? When it goes above the zero level, that's positive momentum and we should be looking long. When it goes below, that's bearish momentum and we should be looking short. Well, look at how close these crossovers are. This crosses zero, this gets a bullish crossover, we're bullish here, we're bullish here. This crosses over, we get the same crossover. So we're bearish here, we're bearish here. The momentum is bearish and our crossover showed that we were bearish. We get a crossover here and the same thing with the crossover here. We were bullish. We got a bullish crossover. And then we get another crossover. It's bearish and then this is bearish. So I only showed you on this chart, but I did a lot of back testing and saw that this 21 period momentum showed me the exact same things as my crossover. This is my TK crossover. And you're probably wondering why I'm shaded. Well, there's an on TradingView, you can get the indicator that has your Tinkinson and Kijinsen, and it's filled in here. All right. It's shaded in just like your Kumo. So you would have thought this was my Kumo, but instead, no, it's my Tinkinson and Kijinsen. Now this could be my Kumo because the Kumo does look like this, but it's a little bit different period. But if I had the same period as the 9 and the 26, we would just have the same thing as a Kumo. But again, the Kumo is removed here, and this is your TK crossover. And this one, I forget what it is, but I'll show you when we get to the charts. So when we look at that, that's why I removed the cloud, because I believe that the momentum and the directional bias is showing me with this crossovers, it's enough. All right, and faster than everything else that I can use. So therefore, I removed the Kumo. Let's look at these rules real quick. Long trade, bullish crossover. Tinkinson, the green line crosses above your Kijinsen blue line. Positive CVD means you got a green candle on your CVD. And then price breaks the cloud. Not the cloud, but sorry, the Tenkan-sen Kijinsen. Short trade, bearish crossover. Tenkan-sen, your green line crosses below Kijinsen, your blue line. We have a negative CVD, which means red candle on your CVD. And some notes are to remember that the best place to trade is inside the TK zone. The TK zone is the area between your Tenkan-sen and Kijinsen, and on my chart it's going to be filled in. And the best entry is first red or green CVD. The first red, green, or red CVD, not the second, third, or fourth. The first, that's when the momentum is building its strongest, becoming strong. You want to catch it when it first gets strong. So you probably don't know or believe everything that I'm saying. Why should you believe me? Why should you believe that this strategy is any good? You don't have to just believe me. Other people trade this strategy and are doing very well with it. There's other people that I could have showed you, but I'm showing you one trader that's sent me a text message, and he's a member on our website and a very, very good trader, and he helps people a lot. All right. But anyway, he said this to me. He said, "You ready for this?" Because he traded this system. He's been trading this system. Matter of fact, he's one of the people that started his trading with $10,000, I believe it was. And he used everything that I had been showing him. And he said, and he wanted to see if everything that I show him would take his trading to $10,000 in a year. Well, he did $10,000 in like, he went from 10,000 to 100,000 in like, I believe it was 10 to 11 months. He did it before a year. So he took his account from 10,000 to 100,000 with everything that we do and talk about in our membership. All right. And then he traded this system, and he said, "Am I ready for this?" And he said he made $15,495 for the week trading our system. All trades docked in the Forex room. My last trade, I cheated a bit and used the 1, 2, 3 reversal, but still used my levels and all. Just my cloud was now in tune on that one trade, but couldn't resist it at the level. Thank you for all your testing and studying you do to help us. Also, before I forget, check my DM to you. Okay. And then he said, "Pizza and beer on me today. Be safe." I've been waiting on the pizza and beer, so I didn't get it yet. So we'll see what happens with that. But Oji-san is a great person, so I'm very happy for what he did and what he's doing for our community. Okay. And that's true. Exactly what he sent me. I didn't ask anyone to do anything for me. I never do. Anyone that sends me something and tells me how they're doing, that's what they do, and that's what they're doing. I show you how to do it. I teach you how to do it. I show you me doing it, and I see you doing it, and then you're profitable. I told him it was fantastic news. All right, so let's look at this. All right, so we're going to go, actually, we're going to use the one by Ankit_1618, all right? So this is when the market opens. We're going to trade this whole trade here. The market opened, and we waited. So I don't really trade at 9:30. I usually wait. So the first opportunity came around 10 o'clock here. We pulled back. The crossover was bearish, so we're bearish. So we looked for the market, and we had a red candle here. We had a red bar here, and we just broke below. So we have an opportunity to take the trade. We're going to take the trade. So this was our entry. You can see how far it dropped down. So another entry would have been here, I believe, and then another one here. All right. Actually, this one's showing you to get out. No, actually, I'm sorry. This was our entry. So let's back it up. This is your entry because you broke below Tenkan-sen right here. All right. And also you had a confirming from your cumulative delta. You saw aggressive sellers coming into the market here. Why are they being aggressive and selling at this level? Because they believe it's going to drop. And you're dang right. It did drop. Look how far it dropped. Now, this is what I'm talking about, managing your trade. I barely can catch this whole thing. It's hard for me to be disciplined enough to catch this whole thing because I would be waiting to get out here where it closed above Tenkan-sen here. And for sure down here it did. Here it was close, and you probably should have taken your profit. So you would have got in here, take profit here. But what becomes hard is when you get in here and then you get this happening. All right, because that's over $200 right there. And then the market drops. You're in about over $400 right here with one contract. Then the market corrects, takes away half your profit. It's hard to stay in that trade. The only way to stay in that trade is if you're using more than one contract. So if you have more than one contract, you can take profit and let the other one run. But with one contract, it's hard to do. All right. And so I'm also trading a challenge. So, and the challenge that I'm using, they don't allow me to split they don't allow me to take profit like that. I have to use one contract or two and take profit with two contracts if I open up with two. So this is what it does right here. Boom. All right. Giving us another entry here. All right. Now this is the problem here. So this is something you're going to have to think about yourself. We closed way far away from this level here. And the candle's way bigger than any other candle. A big stop loss. So this is going to be something that you really need to weigh. Are you going to take that trade? Is it worth it? Can you reduce your contracts? So you want to make that fit into your money management. You don't want to blow your account on one big trade stop loss. You want to be able to say, if I do lose this whole trade, it's a 2% of my capital. So what I like to say is when I take a trade, whatever my stop loss is, that's what I'm saying I lost already. And I'm able to give that to someone. All right. So I'm saying that's what I've already lost. And you should be able to say that. If you can't, you don't take this trade. But anyway, when this took off, you could see we made profit on this trade. All right. So you would have made profit on this trade. Give you some nice opportunity to make the profit. Let's look at another opportunity here. So this is where we're looking at your Tinkinson. And then I'm not using Kijinsen here. I'm using the super trend. And I am using my Quant Tower platform. So on my Quant Tower platform, this would have been your entry right here because you broke below. You had a bar right here that was bearish. All right. But then you broke above. So it all depends how you're going to trade this. If you would have gotten out when I told you to get out with a close back above Tinkinson, you would have been out here for a loss. If your stop loss was up here and you didn't get out, then you would have still been in this trade. In this case, I'm saying you got out because we said we're going to get out here. But then the market gives you another opportunity. It closes back below Tinkinson. And you're confirming with another bar right here that's showing you, right? So you're entering here and you're confirming. So your entry is here. If you're very good, you're not going to get out of this trade till here. All right, because no bar ever closed above this level. But you know how hard it is to do this? That's why a lot of times what I'll do is just walk the trade. So if I enter here and my stop loss slightly above, I move my stop loss with the bars, with the lows. And when I get into a flat area like this, now I would have probably got stopped out here maybe. I don't put my stop loss right on the level. I'm a little bit above. So if I was able to maintain, then I might have made it down to this level before I get taken out. All right. Or else maybe I get taken out here. But this would have been good profit here. All right. But if you catch this whole thing, that's very much a lot of discipline. It's very hard to do. Now, once you get through this level, if you could get down to here and you see this happen, you'd probably be safe because now you once you have more to risk, you can let it run a little longer. You feel safe letting it run. But once you feel like you made some profit and you start to see it come back on you, it's easy to get out of that trade. And that's where you do get out. But the rules are to get out when you have a change of color. All right, so let's go back over this real quick. So if you get in here, one rule is to get out here. So you got out there. All right, another rule that you can incorporate, it all depends how you're going to do, is to get out, is to walk each trade. When you go short, walk the lows of the candles. All right, and then it would take you out either there or here, depending on how tight you put your stop loss. The next thing you could do is wait for the market to close back above your Tinkinson. If you got into the trade breaking below Tinkinson, wait till it closes above Tinkinson to get out of the trade. All right. Then the next thing that you can do is just have a set profit target and say, I'm going to take profit at that point, and you take profit. And then finally, the next thing that you could do is your 1-to-1 ratio. Now on here, it doesn't, I don't have a good end wave to show you, but that 1-to-1 ratio is something else that you could do. All right. So again, also looking at this, we start looking at being able to get into the market on change of colors, right? So we're going to go back. You could have got into the market here, then you would have got stopped out there. All right. But then you would have been able to get back into the market here, and then it would have given you good profit. Now, if you got out here, then you would have lost your profit. All right. And then the market gives you another opportunity here. All right. The market drops, gives you very good profit. All right. So that's how we trade the system. That's how I'm trading the system. Let me compare this super trend with my Kijinsen so you can see how close they are. I'm pretty much using the super trend, but they're very close. So the blue line is your Kijinsen and the super trend is your red line. Super trend at times is a little farther away and it flattens out a little bit more. And I noticed the market honored it a little bit more sometime, but they're super close together. Let's look at it again over here. So what the difference is let's take notice here. This is why I use it. Look at how my super trend is giving me, I'm bearish all the time. I'm bearish, pretty much bearish, this whole chart there, right? So that's bearish. But when I use Tenkan-sen Kijinsen, I get a crossover that's bullish here and messes me up a little bit. And then I get another crossover that's bullish here. So these two crossovers changed my bias of the market when I didn't need that to happen. Well, had I done that, I would have missed some of these trades. Because see, this would have been an entry here short, but Tenkan-sen Kijinsen was signaling long. But if you didn't have Kijinsen right there, and you were using the super trend and your Tenkan-sen, you would have taken a short trade right here. All right. And then you would have made good profit. And then you had a crossover here, but in reality, you would have taken a short here if you were not using this. And then you would have had another short here, which was a good trade. But you wouldn't have caught those trades because you're using Tenkan-sen Kijinsen, and it doesn't give you the opportunity to stay with the trend like this. The longer term trend, it seems like more. All right, so there you go. That's why I use it, and especially when I'm trading with Quantower. And I trade with Quantower most of the time. Sometimes I'm using NinjaTrader, but I usually use Quantower. When I'm trading my own account, it's Quantower. I use this platform and I love it. All right. So let me show you some trade setups or some, let's back test this strategy. Let's just run through the market real quick, back test it, and then I'll get out of your way. So let's go to the charts, back test it, and then hopefully you understand this. I know I go on sometimes so long, but I just want to make sure people are clear with it and understand. Guys, again, if you have any questions or anything, let me know. You know, I'm here to help you. And also visit my website. You saw the beginning, fx@oneglance.com. Visit my website, check out my blog, and so forth. All right, let's go look at some charts and see what we got going on and back test this thing a little bit. We're going to look at one day, go from 9:30 to 4 o'clock, see what kind of trades we come up with. All right, let's go. All right, guys, so let's just do a little back testing a little bit. We're not going to be very thorough as far as like taking profit and so forth. We're just going to see if the strategy, well, basically, we're going to just see if the trade, when we get into the trade, if it makes profit or not, if it would have been a losing trade or a winning trade. And a lot of trades sometimes are going to make a difference based on how you manage the trade too, also, especially when you're scalping, because the movements are going to be pretty fast. So you're going to have to watch for that. I know like a lot of times I could get up to $300 profit, and then the next thing you know, I'm down to like negative that quick, like seconds. So it's going to matter how you manage your trade and everything. Okay. So we're not going to go through all that part of the aspect of this trading. We're just going to see what happens. So we're going to start at 9:30. Basically, that's when the market opens. So we're going to start, and we're going to take, I don't usually start trading until 10 o'clock. That first half hour, let the market line out. So we'll just wait. We'll just see what the market does at this point. So this was where the market opens up, and you can see how sporadic it is and how crazy. And then I'll explain what's happening, or what I would be looking for and what I would be thinking or doing. And then we'll look at the cumulative volume delta to understand what's going on also. All right, so like this is mess. This is nonsense. This is why you kind of stay away from it at first. And sometime I'll get into points where it's like that for quite a while. And then we'll get into a good trend, and then you'll start to see it back off and start to do this again. But you just want to be careful. All right, so now we're going to look at trading because we crossed over. We're getting close to 10 o'clock, so we've got a good crossover. And we're looking at seeing where it's holding right here, quite possibly. So this broke through. We would take our entry on this point. Now, we don't have confirmation with the cumulative volume delta. So let's just see what goes on here. And this would have been a good trade. And now the delta shows you that buyers have come into the market pretty strong. We're already into the trade, basically. And then you can see what it does. It gives you really good profit. So you would have made a good profit on that. So let's say we're done with that trade. We're going to look for another trade. And I'll try to walk you through this. So you're not paying attention to anything here because you're basically going to go long. All right, just because you're crossover. And we're not even using our cloud because I took the cloud away just to show you when we're scalping, we can just take the directional bias of this Tenkan-sen because like we talked about, this is based off of momentum. And it's also following that 21 period momentum oscillator pretty much. So I don't see no reason to have anything else on my chart or to understand anything else. Now, we didn't close above. See, a lot of times you get up here, you will get anxious. You see the market get way up here, think you're missing something. And then what you do is you get into the trade up here and you're in a losing position now. That's why you need to follow the rules pretty closely. Now you get into the trade. Now you might have been able to get your profit back here if you didn't get out of the trade. If you took the trade here, somewhere in here, and you didn't get out and you let it stay. And I pretty much going to have my stop loss at Kijinsen down here. At least the minimum is going to be to this bar low. So every time I get into a trade, if I've gotten into this one, I'd be at the low of this bar because we're playing momentum. And if it doesn't go and it goes the opposite way, we want to be out right away because there's going to be a lot of good trades. And this trade would have made you, let's see if we're going to get stopped out here. And this could have been another entry too. And this is confirming here. All right. If you didn't get into the trade here, this could have been another entry because we closed inside, closed back outside. I don't like to be too far away though. But you can see the angulation is to the upside with the market. You're making higher lows. All right. So you should feel confident to get into that trade. This here could have been a profitable trade for you as long as you're following your rules. You wouldn't have got stopped out. That's for sure. And then you see big profit here. You would have profited from this trade and this trade. So it would have been a good trade here. Confirmation from your cumulative volume showing you that buyers are into the market. You should feel secure about your trade. Now, a lot of times about taking profit, there's a couple things that I told you I do. One of the main things that I do, let me get this thing going here. Hold on one sec. All right, so one thing that I try to do is like if I get into a trade, I'm usually going to have my stop loss at the low of that candle. I'm going to enter at the high. And then I usually try, like if we got in here, we're going to try to follow the low. That's where, so our stop loss will start here. Then we'll move it up to this low. And then we'll move it up to this low and then so forth. Now, it all depends how I'm trading this because I could be trading for a set target. Now, if this was say 400 or 500 profit, $400 or $500 profit, I may just take that profit because I know I'm going to be into a couple trades throughout the day, more than likely. So I may just trade and take that profit. All right. So the next thing is, let's get rid of these lines. We also have this N wave, so we probably hit the 1-to-1 target also that we talk about. Okay. And that would have been another way to look for your profit. So I'm just showing you some suggestions that you could probably do when you're looking for profit. So one of them would be to start out where you enter, the candle you enter, and then follow the lows up until you get taken out. All right. And sometime like this, you know, this is a big gap here. So you don't want that to come way down here and take you out, because that's way too far and you already had good profit. Right. So let's look at one other thing real quick here. The other thing that we wanted to take notice of was our N wave. So that 1-to-1 measurement. So see how we hit that 1-to-1. So if you enter here, you shoot for that 1-to-1 right here. So that's how you're always going to look for that, because this is your natural N wave that the market likes to move in. Like I told you guys, moving right into that N wave, and it comes right up to this level here. You could have taken your profit there. So that would have been another way to get your profit here. You have a set target, or else you have a set number in your head that you're looking for, or else you just watch. You know, there's a lot of things that you can do to manage your trade. So I'm not going to really tell you how to manage your trade right off the bat. You can figure out how you want to manage your trade at that point. But let's look at the rest of this. So we're going to go through the rest of the day here. We can take this off the chart. So boom, nothing there for us there. All right, so nothing really here. Like, it didn't close inside, so I wouldn't be taking this trade. I wouldn't have taken this trade. That wouldn't have been one that I take. But now it's moving inside. Now it's inside. So now I'm looking to get outside of the outside of this zone. So my next trade, I could take a bounce off of this level. That would be one thing I'm looking for. Taking the trade as close to this level as possible is one good thing, but then in another way it's not. And I'll try to show you if I get into that predicament. So if we get a green bar with cumulative volume delta increasing while we're inside the TK zone, I would take the long trade. That's where I would take the long trade. So price action wise, and I don't have red here, but price action is always going to get me into the trade most of the time quicker than mostly everything I could do. All right, most of the time. Now I could take a trade here. So this would be where I would take the trade, right? So I can take a trade at this point, and I would put a stop loss. I'll probably put it here because this is the low point. I wouldn't go here, but because that's the low there. So it's so close that you might as well be there, right? So that's what you would do. I would definitely shoot for at least this target here. Let's see what's going on. Let's see what we're going to get right here. So we're in a little bit of profit. And now we close to getting, it all depends. If you put your stop loss there, you close to getting stopped out. And I don't know about your profit. So this could have been a profitable trade. It all depends how you manage it. You would have got one candle that was good, and then it pulled back all the way. Maybe you get out of the trade, and then you're out of the trade and you don't have anything at that point. But now if we stayed in the trade, because we didn't get stopped out, because remember our stop loss was here. Even if we were here, we still wouldn't have got stopped out, and we're still in the market, and we would have made some profit. Again, the N wave target is here because you went 1, 2, 3, and then you're shooting for 4 right at the N wave target. It would have been right to that level. So when you see the market give you that V wave, which is right here, you could see that V wave. That's when you start looking for your target. So you know you're getting in on the 3 level because you got 1, 2, 3, and then you're shooting for 4. And you would have made 4, and I don't know how you want to manage your trade. This is so close, and the market's getting so tight that you could give it an opportunity to run if you could, but you could just take your profit because it rejected the 1-to-1 ratio level here. It rejected that 100 level right off the bat. So you might want to take your profit there. All right. And then let's see what else this market's going to do. We're going to trade it right to 4 o'clock, right? Because it's 11 o'clock now. Okay, so there's an entry right here, and we're confirmed with this bar right here. So we got an entry because we came in, closed above, and then we make a little bit of profit. Again, you could look for another one-to-one. This one-to-one is going to be here. So you could look for your one-to-one from here. It goes here, goes down to here, and then this would be your one-to-one right at this level. Let's see if we get there. We got past there. All right, so we would have made that profit. When we get a candle that blows through like this, I like to at least take my stop loss wherever it is. So if it was here, I like to take that stop loss and at least move it a little bit above that level. All right, because that's where I'm giving this a chance to be a free runner, or else you could take your profit up here. But let's see if you could get more profit. You know, you got kind of like a free trade, so you got a chance to let it do what it's going to do. So now at this point, what I definitely would do is put my stop loss right about here. I want to be under this bar now. All right, so now whatever is going to happen, that bar is going to take us out, so we would move it up a little bit to there, but we could stay where we are, and we're pretty much going to be, let's see, stopped out. So we make that profit. We made the one-to-one, and we made a little bit more. Now, when the market was way up here, you could have decided to take some of that profit already, okay? And then also, like, it all depends how you're trading. If you have one contract, you manage it more so like this. 2 contracts or more, you could take some of your profit and let the rest run and so forth. So there's a variety of things you can do that we're not going to discuss in this video. We just want to see if the strategy is giving us good moves and so forth. If we're getting the moves that we want to see from the market by using this strategy. All right, so it's about 11 something. We're still trading. Now, we're not going to jump in anything here. We want to wait for the market to pull back into our zone. So we know we're not doing anything. Now it pulls back into our zone. Now we're looking for a trade. Now, we went flat and then we opened up here. This could have been an open up trade for us. I usually don't take that unless it goes red and then green. So I wouldn't have taken that one. So I'm looking to see for the market to break out. There's the trade. So we're going to enter this trade. Now I'm going to take this stop loss a little bit different. So we're going to enter the market there. I'm going to put the stop loss a little bit lower than that candle. All right. And then we're going to see what happens here. Making a little bit of profit. I can't judge my one-to-one. It's still going to be very big if I judge it here. Making a little bit of profit, and market gave us a little bit more profit. Looks like we're getting out because we broke this low here. So we would get out of this trade. All right, so we'd be out of that trade. Let's see what else goes down here. So there's another entry right here. So we would enter the market here because we came inside our TK zone. This is the TK zone. This area is the TK zone. All this area. And that's where you're looking for your trades. So when it's outside of that area, you don't really get into the trade. Now, I can show you another strategy to get into the market when it is outside of this area, because sometime in a very strong trend, you won't come back into that area and you'll just be out of luck. So let's see where we're going to get here. We're going to enter the market here. Stop loss here. Let's see what we get. Let's move this down. Let's get that. Move this down so we can see. You see where our stop loss is down here. We entered there. And on this one, I still can mark the one-to-one where our target would be, because we got this N wave here, and this would be the 3. We would shoot for this level right there, and let's see if we're going to get there. Consolidating. Now it looks like we break these lows. We're about to get out of this trade. We might get out of this trade with a small loss, maybe a small gain. It all depends how you manage it. And if you let it come all the way back, you're stopped out there. So this trade, more than likely, depends on how you manage it. All right. And then it's 12:16. The market breaks below Kijinsen, but we're not looking at any short because we didn't get a crossover, so we're not going to short anything. And I'm going to talk about the change of direction. So here is the first crossover to the downside. Now, what we wait for in order to take a trade, and I'm going to show you another way to trade this, but we want to see the market do the move and then correct, and then we get into the trade at the correction area. So long as it stays with a crossover that's bearish, whenever it corrects, then starts to move back to the downside, that's when we get into the trade. All right. That's when we would be looking for our opportunity. So right now we're just not doing anything. We're not catching that. It's 12:46. We're not catching anything here. And again, I will show you how to catch some of this trade setup using the other cumulative volume delta, not the one that we're using here. So no opportunities yet. It's 1 o'clock. We trade till 4, but I usually stop at about 3:30, pretty much 3:30. This kind of closed below. Not confirming here. It's close if you decided to take that trade. All right. And if you did, what's happening? You're making a little bit of profit because you would have entered right there because it really was pretty close to closing below. You weren't confirming yet, but now you're confirming to the downside and you're making a little bit of profit there. All right, so you would be in profit on this trade, and the market gives you even more. All right, gives you a decent trade here. You get into a very good trade here, and now the market's pulling back. So one other way that you can get out of your trades, once you enter a trade, you could stay in a trade until it crosses back over Kijinsen. Over Tinkinson right here. So once you cross back over Tinkinson, because you get in on the cross of Tinkinson and you get out on the cross of Tinkinson. These are some of the ways that you can manage your trade. Not telling you everything to do at this point. We'll talk about more of a managing of trade on a different video. So we're getting ready to look for another short because we're inside that zone. So inside this zone, we're waiting for a close below. We didn't close below. Still didn't close below. Now we did. We would have got stopped out if we took that trade. That would have been probably close to being stopped out. Let's see. Yeah, you'd have got stopped out on this trade. This would have been an entry short because it closed below right here and we didn't cross over to the upside. Now we're kind of flat. Now we crossed over to the upside. Now once we cross over, what we're looking for is a pullback. So this is the move higher. So again, now since you crossed over, you want to see this move one higher. You want to see it pull back and then go. All right. So now once it corrects, we could get into the trade. And that's what we always look for when we change direction. That way we can confirm that this is really the move to that in that direction, pretty much. Gives you an opportunity to prove that. So now we're hitting this level. That's the pullback that we're talking about. And then what we want to see is a close above now. We're not worrying about shorting anything. We're going to go long right here. We're taking a long right there. Stop loss a little bit below there. And then you take your trade. All right, and let's see what it does. Stopped out. We didn't make any profit. We wouldn't have gotten in. We got stopped out. And now it looks like it's trying to cross over. and it actually doesn't. So it's 246. We're getting ready to stop trading. There's your crossover. So now we want a correction. That's not your correction on the cross. You got to get the crossover first and then consider your correction. So now when it moves back up, then we can short it. So let's see where we are. We're looking for a short now. That's a strong green candle. We're not getting an opportunity yet. Now the crossover is to the upside. And I would take a crossover trade, but this is close. I don't take those trades most of the time. So now I want to see the correction, okay? So again, now you got the move. So you see I've been stuck getting out in any bad trades. So you want to get the correction now because you got this move. You want to get your correction where we're going to get into the trade. So this will keep you from getting bad trades and being on the wrong direction. Waiting for that correction before you take anything. All right. And it's 3:16. We're getting ready to get done with the market here. Let's see if it gives us another opportunity. It's not in there yet. Now it's in there. It's 3:30. We're going to go long right here. All right, so we would take a long right there. Stop there. And then the 1-to-1 is big here, but let's measure it. We're going to measure the 1-to-1, see if we're going to be able to get to that level. I don't believe we will because it's big. Well, it's right there, so let's see if we get there. All right, so we're in profit. So how do you manage this? It's looking a little weak. All right. We're looking weak, scary. This is where actually, guys, it's so hard to trade. This is where you're like in between because you made some profit, but now it took it away from you and you're like not enough profit to get out, but you don't want to get into a loss. So let's just keep it here. Stop losses there. You close below these levels, you would get out of that trade more than likely, right? We're back inside the level here, and now it's going to be, let's get this out. So let's consider that a losing trade because I don't think, we went up 2 candles, but not much. I may have been able to get maybe a small profit or not too much of a loss there. Probably wouldn't have taken the full loss for sure though. Managed the trade a little bit good. So now it's close to 4 o'clock and I'm getting ready to be done trading. And let's see what the market does here. It crosses over, goes back above, crosses over, and now you can see it's 4:30. I'm done trading. I would be done trading right now. Market's going to get crazy here. All kind of volume going to come in because everybody getting out of their trades. So that's how I would be trading this. Just a quick view, let you see how it was that whole day of trading. You would have made some pretty decent trades, and that wasn't even a good day because most of the time you're going to get a lot of trades with some very good profit. This was decent profit. I didn't see any real big moves on our trades. There were some good ones like this one here. This was a good trade. All right, and then we had couple decent ones. This was a good trade depending on how you manage it. So we did have some very nice trades here, some opportunities. Again, you don't want to really trade until like between 9:30 and 10. You want to let that market settle down, and about 10 o'clock I start really trading, and I'm done by 3:30, 4 o'clock. 4 o'clock for sure. Definitely done by 4. I don't trade anymore after 4. So that's where we're done here. It's 4 o'clock and we're done. You saw we made some good profits, some good trades. You see how to enter the market, how I do this. Guys, this is so simple and so profitable, and I don't know why, but it really, really works. And just wanted to give you guys a thorough breakdown of how I trade the market using this Tenkan-sen cross. And this is how I actually trade the market. All right, I'm not holding anything back from you. I'm not asking you to give me any money or do anything. I'm showing you exactly how I trade the market every day when I'm scalping or when I'm day trading. That's how I trade the market. I follow the direction of the crossovers. I wait for a break below the 9, then I enter on the break above if we're bullish, and then vice versa on the downside. All right. So hopefully that helped you guys out. Guys, appreciate you watching my videos. If you like this thing, let me know. If you have something to tell me, then make a comment. And if you really want to see more content, then subscribe and you'll see more content. All right. And I'll be putting it out for you guys. But until next time, guys, have a great one. God bless. So long.